US stock markets appear to be on track to end for a second week in a row in the greens. In today's report, we are going to discuss the recent trade deal rhetoric and conclude the report with a technical analysis of S&P 500's daily chart. The US August 1st tariff deadline is looming, and with just over 1 week to go until they go into effect, some nations are still trying to reach a deal with the US. Yet with the tariff deadline looming, some nations have managed to secure a trade deal with the US. In particular, President Trump stated on his Truth Social account yesterday that we just completed a massive deal with Japan, perhaps the largest deal ever made. Japan will invest at my direction $550 billion into the United States, which will receive 90% of the profits, and that Japan will pay reciprocal tariffs to the United States of 50%. In turn, the announcement of the trade deal with Japan has spurred a positive market sentiment that further trade deals may ensure prior to the August 1st deadline. Specifically, optimism is rising that the EU may secure a trade deal with the US prior to the deadline, with President Trump stating per CNBC that we have Europe coming in tomorrow and the next day we have some other ones coming in. Thus, the comments by President Trump may have provided support to both the European and American equities markets. Furthermore, US Treasury Secretary Scott Bessent stated that we are making good progress with the EU, which may have further improved the positive market sentiment. However, the EU is also preparing for a no-deal scenario, with Bloomberg reporting today that the EU has released a 30% tariff on approximately $117 billion worth of US goods. Nonetheless, the possibility of a trade deal occurring with the EU prior to the deadline may have provided support for the US equities markets. Although should a deal not occur, it will have the opposite effect. S&P 500 appears to be moving in an upwards fashion, with the next possible target for the bulls being the 6,425 resistance line. We opt for a bullish outlook for the index, and supporting our case is the RSI indicator below our chart, which currently registers a figure of 70, implying a strong bullish market sentiment. For our bullish outlook to continue, we would require a clear break above the possible 6,245 resistance line, with the next possible target for the bulls being the 6,715 resistance line. On the other hand, for a sideways bias, we would require the index to remain confined between the 6,135 support level and the 6,425 resistance line. Lastly, for a bearish outlook, we would require a clear break below the 6,135 support level, with the next possible target for the bears being the 5,850 support line. Thank you for tuning in to our financial news. From all of us here at IronFX, we wish you a solid trading.